Life is full of surprises. Careers are full of surprises.
Yeah.
And you have to make the most of the time that you have, however long or short that time may be.
What is your view on India?
Very, very bullish. It's sitting on phenomenal demographic fundamentals that other countries, frankly, would give their teeth for.
Yeah.
But it can't get complacent.
One word that defines your leadership style.
The only finite commodity we have is time. So go fast.
At the biggest wealth destroyer, is it inflation or bad investment decisions?
Neither. The biggest wealth destroyer is probably inertia and not making your money work hard enough.
Hello friends, I am Anuj Mathur, MD and CEO of Canara HSBC Life Insurance. I welcome you into another session on Depend on Insurance, Depend on Us. And friends, today we have a very special guest with us, Mr. Edward Moncrief. He is the CEO for HSBC Global Insurance. Welcome, Ed.
Namaskar. Thank you for having me.
Thanks. No, really great to have you in the conversation and great that you took out time for this conversation. So welcome once again.
Thank you. Great to be back in India. Great to be in Gurgaon. And look forward to conversing.
So Ed, what is your thought process in terms of how the insurance penetration can increase in India?
Well, I think what India is facing is a significant opportunity, frankly. But also, a challenge in terms of how to realize that. And as the population gets richer, as GDP per capita starts to grow, then there's going to be increasing demand from consumers to save for retirement, to protect against rainy days, to manage their healthcare, ultimately to reduce the reliance they have on the state and or reduce the reliance that they have on their families, which is a basic human instinct of I don't want to be a burden. And that's what drives for demand for insurance. So I think the demand in India is going to organically grow anyway. The challenge will be how does supply match that demand? And that's where I think we really need to look at across the industry around distribution. Do we have the right distribution models in India? Is it affordable? Are there alignment of interest between banks, brokers, agents, risk carriers, customers, etc.? These are the big questions I think the industry, the government, the regulators will need to work through over the coming years.
Yeah, well, absolutely. And Ed, you have had a remarkable professional journey. Can you share with us your personal life moments which actually helped you in your professional journey as well?
Well, look, there've been so many, right? I think for me, I never, like many people, I never sort of left school and wanted to be work in insurance. It just happened, right? I did history as a degree. I like to write, I like to analyze. And then when I realized that I wasn't very good at, my previous sort of selected careers in journalism, I ended up in insurance. And a lot of the skills that I think I acquired at school and at university around analytics, around interpretation, and then around being able to communicate and narrate complex macro subjects to micro audiences, I think have come in helpful for my career at least. And the only other point I'd say is, I live in Hong Kong now. Before that, I was in Brazil. Before that, I was in Ireland. I never had a plan to go to any of these markets. It just happened. Opportunities presented themselves, and I said, I'll take them. So for me, I guess any advice I would give to people embarking on a similar stage of their career is don't be afraid of taking risk. Don't get lazy, don't get comfortable, and you never know, a strange sort of parallel opportunity in another business, industry, market, brand, country, may be the making of you.
Great. Tell us something about your personal life, your family.
Sure. So I'm from the UK, as you may have guessed by my accent. I was born in London. I grew up in the south of England on a farm, actually. My father was a corporate lawyer who then effectively wanted to become a farmer. So we went through that transition. Some of us still transitioning. I've got 3 kids. I've got an 8-year-old, a 6-year-old, and a 2-year-old. And that keeps me very, very busy. And all my kids were born in Hong Kong, so they're all kind of Hong Kong babies. But for me, family's always been very important. I'm one of 3. I have 2 younger sisters, and now as a father of 3, for me, it's always provided a sense of perspective, right? And when I look at work, when we such as yourself, we get stressed. There's stressful things that happen in the office. There's corporate challenges, competitive tensions, etc. Yes. But none of that compares to, I think the stress of managing a family and the reward and the satisfaction of spending time with family. So why do we work? We work so we can optimize the time with those who we love.
Yeah. So I'm sure you're able to take out time for them from your busy work schedule.
I try. I think, I'm absolutely not a role model. And I'm sure if you would ask my wife, she'd be rolling her eyes right now. But, I try. And I think for me, it's weekends, right? And weekends are very important for me to spend time with my kids.
Right.
And be present, not be there on the BlackBerry or the iPhone, working, but when I'm with my family, be with your family, right?
Good to hear that. Yeah. And life is full of challenges. Could you share some personal or professional challenges which you faced during your initial part of the career, which helped you in terms of going into this role?
Sure. I mean, like many, there's been ups and downs across the journey. One particular moment that stands out, my very first boss actually in HSBC was a wonderful man who took a big chance on me as some kind of young Turk that was probably a bit too big for his boots. But he really kind of believed me, gave me a huge amount of responsibility at an age where, frankly, I wasn't sort of emotionally or intellectually ready for it. He passed away very suddenly, actually. He had in a car accident about, it would have been 2009, so a while back now.
Okay.
But he was almost my sort of first and only mentor, so to speak. And I think the suddenness of his passing really provided a lot of perspective. That life is full of surprises. Careers are full of surprises.
Yeah.
And you have to make the most of the time that you have, however long or short that time may be. And that's really, for me, kind of driven my attitude, one, to life, and two, to business.
Right.
You never know what's around the corner. So you must make the most of every single day that you have.
Right. Ed, India has covered a lot of distance in the last 10 years, if you look at, and today it's the 5th largest world economy.
Yeah.
What is your view on India, and where do you see India in the next 10 years?
I'm bullish.
Okay.
I'm bullish. The organization HSBC I represent is bullish. India, we do see India as one of the core growth engines globally, whether that be around wealth creation and wealth transfer, and also trade and wider corporate development. I think you've got a lot of international capital now looking at India, looking to try and get returns in India and to ride that wave. That said, if I try and sort of play devil's advocate, we've been here before, right? There were a number of times in the past 20 years where we said, this is India's moment. And the country hasn't been able to grasp it. So I don't think we can take the kind of inexorable growth trajectory as a given. I think it will require very strong stewardship from government. It will require very strong stewardship from regulations. It will require, in my opinion, more international capital, and that includes human capital, coming to India. And frankly, it will require more Indian capital leaving India and selling that Indian story across the world. And I think this will be the big challenge for India over the next 10, 20 years, which is an exciting challenge, of how much is it going to be a domestically driven economy versus a genuine international trade, international wealth creation economy. So very, very bullish. It's sitting on phenomenal demographic fundamentals that other countries, frankly, would give their teeth for. But it can't get complacent. It really can't.
True. Yeah. So great to hear that. So Ed, you are a veteran in life insurance. I would like to take your views in terms of how Gen Z should plan for future, should plan for kind of uncertainties of life.
I don't know. I might have to ask my kids, right? Well, part of it, frankly, is making sure that you have sufficient Gen Z voices within your organization.
Yes, we do have,
I think companies make the mistake of having a bunch of old, kind of middle-aged, guys like me around the table, presupposing what the younger generations want or need. So actually making sure you have diversity of thought diversity of age and experience within your businesses is critical, right? I don't think you can map out a demand curve, from a boardroom. But I think without wanting to generalize too much, a lot of it will come down to digitization.
Yeah.
A lot of it will come down to mobile first. So, in our industry for the past 100 years, it's been almost a manpower game. How do you get enough bodies on the streets to raise awareness about your products and services?
Right.
To drive consideration for your product and services and trigger that latent need of people who they know they need to save for more, save for retirement. They know they need to protect for a rainy day or for accidents. And you connect the dots. Now that's not going to work, I don't think, with Gen Z. Gen Z is a mobile first. It is a Google first style mentality. How do you fit your brand, your promises, your products and services to that? Right. I don't think it's difficult. I don't think it's impossible for our insurance sector to do that. But make it relevant, make it digital.
Right. But again, in terms of insurance awareness, where do you think people should start planning for insurance, for life insurance? Because typically, I think there are other priorities, particularly when you are young, which kind of take precedence over other things. So how do you prioritize that?
Sure. I mean, like what I'd say is there's only 4 things that our industry does, right? Very simple. We help people protect against the risk of living too long, okay? And becoming a burden on the state or their families and their loved ones. We help people protect against the risk of dying too young, and losing the breadwinner and not being there for their family. We protect people against the risk of getting sick and losing their income. And we protect people against the risk of, ultimately not being able to access private healthcare and get the best surgery we can, right? Now, historically, I'd say people would trigger these risks when they're in their 40s, 50s, and that has to change. Yeah, I think that has to change.
I think that's a bit late in the day, actually.
For sure. And, I mean, my life experience probably the same as yours, probably the same as everyone else. But I wish I'd started saving earlier. I wish I'd benefited from the magic of compound interest, which is the most magic thing in the world. I wish I'd benefited 10 years earlier from that. I'd have a lot bigger nest egg for retirement than I have now. And, and my kids and my wife would be a lot more relaxed, right? So, I think it's going to be for, we talk about life moments when you get married, when you have children. Yeah. And those are some of the triggers. But in reality, my view is once you start earning, you should be looking at your disposable income on the basis of how much am I consuming versus how much am I saving.
Right.
And insurance will always be, in my view, a preferred savings vehicle because you're taking illiquidity cost for illiquidity premium.
Right.
And when you're young, you don't need the liquidity. You're going to be saving for a long period of time.
Yeah. No, I think that's very important advice. And sooner you start, better it is.
Of course.
Ed, you mentioned about the longevity, which we are all seeing. Mm-hmm. And now with the kind of advancement in medical sciences and this longevity, when exactly should the retirement planning start? Or what kind of portfolio one should create over a period of time so that one can have a good retired life? Yeah, again, it's
the hardest question in the world, right? Which is why advice is so important and why, ourselves as insurance businesses around the world place such a premium on providing advice and our intermediaries providing advice to customers. The easy answer is as soon as possible. And again, I go back to this point around compound interest, which every person at school should be taught. Yes. People should understand the opportunity cost of if I start saving $100 age 25 versus if I start saving $100 at age 35, the difference that I'm going to have when I retire at 60 or 65 is astronomical. So the answer is as soon as possible. And then there's basic financial kind of advisory tools and tips that everyone should have in mind, which is obviously don't put all your wealth in one place. Don't put all your eggs in one basket. Right. Diversification is important. Right. In the old days, you'd say you'd have a 60-40 or an 80-20 fixed income versus, equity portfolio. Whether that still holds today, I don't know. Whether you should be having exposure only to domestic sort of stocks and bonds versus global stocks and bonds. A lot of this will come down to your individual risk appetite, your affordability, and the quality of the advice you're given. But again, I go without becoming an insurance salesperson. The beauty about insurance, but again, particularly at a young age, is you don't have to worry too much about that. Whether you're buying a traditional plan, whether you're buying a participating plan, whether you're buying a unit-linked plan, you are effectively outsourcing a lot of this to the insurance company. And the insurance company and businesses such as yourselves, what they're doing is providing institutional investment management and risk management capability for individual consumers. That's the value proposition. Because frankly, when you're 25, when you're 35, even when you're 45, you don't have the time, the bandwidth, the willpower, the skill to be making all of these decisions every day. Let someone else manage it for you.
Absolutely. And I think you talked about power of compounding. That's really important because the sooner you start investing, you will have a bigger corpus when you retire.
This is the basics of finance and wealth creation.
And HSBC is investing in health and wellness initiatives. Could you please share some of those initiatives? Because in India, I think we are also trying to create awareness on health and wellness initiatives. So how can we take it forward? It's a very important topic.
Sure. I mean, it is a very important topic. And the cliche that we always say is, well, your single most important asset is your health. You only have one of them, right? Your body, your mind. This is your, there's no compounding interest on this, right? Yeah, exactly. There's no indemnity, right? So I think for us, it's been a case of how do you make health more front of mind, more relevant to customers, and a lot of that we've been doing in Hong Kong, for example, and increasingly in China, is moving from indemnification and reimbursement style solutions to prevention. And you always say an ounce of prevention is better than a pound of cure. So we've now integrated our insurance digital systems with our banking digital systems. We've got AI models and behavioral models linked to credit cards. So effectively, we're able to say to someone, the healthier you are, the more activity you do, the more you engage with your body, your mind, your financial health and everything else, then ultimately the better value healthcare we can provide for you. And we can connect you with doctors around the country. So we now do telemedicine consultations every single week. Just connecting our customers with doctors. So instead of having to go to a clinic and get diagnosed, they can have a 5-minute sort of call with a doctor and get a prescription on that basis. So the interspersion of prevention and digital is, I think, what that will determine the winners of this sector going forward. The other point I'd maybe add is in healthcare systems around the world, and I'm the chair of one of the private hospitals in Hong Kong, so I see this from many lenses. In healthcare systems around the world, a lot of the root cause inefficiencies come from the velocity at which cash moves through the system. Quite often you've got multiple players within a healthcare system, from the insurer through the broker to the third-party administrator to the non-clinical staff in the hospital, then ultimately to the doctor and then back to the patient. And in pretty much every country that I've ever seen, the ability for cash to move around the system is seriously encumbered. And that means clients get, when they look at sort of outpatient plans, customers get bad customer experiences. Like, hey, I paid for this claim and I want to be reimbursed, but it's taking me a month or 2 months to get my money back. It doesn't sound like a good deal for me. And when you have, more of the kind of guaranteed medical type solutions, doctors get upset because, hey, I provided this surgery or this consultation and I'm not getting my money from the insurer for another month. So our ability to move cash around, and this is where banks and insurers together with digital payments capabilities have a totally unreplicable competitive advantage. So actually just moving money around the system faster, getting it to the providers faster, getting it back into customers' pockets faster, that takes away a lot of the friction, that reduces your units costs, and it makes your customers advocates.
In the era of instant gratification, how do you convince young people, especially Gen Z, that financial discipline matters?
It's hard. And I think you draw out one of the inherent challenges of our industry. It's an asymmetrical industry. We take money up front and we deliver promises in return over a long period of time. And in today's world, I think you're right. I think people, especially the younger generations, they do want to have more regular gratification. My honest answer is, someone who's worked in many places around the world, it depends, right? I don't think you can take something out of the UK and apply it to Brazil. You can take something out of India, apply it to China. Local cultures, norms, consumer habits will inform that. One thing I have seen work very well, though, is where, again, when insurance and banking can combine, you can deliver that velocity of reaction and that velocity of gratification that is very difficult to do as a pure standalone insurance company. As an example, what we do in many of our markets across Asia is we tie in credit cards with insurance plans. So that actually the more sort of regular premiums that you can commit and the more that you stay on top of your plan that you've committed to for a long-term savings, the more cashback we can give you via the credit card, the more partner and affinity rewards we can give you by a credit card. So instead of just saying, actually, I'm contributing to my insurance company once a month, it's I'm contributing to my insurance company once a month. And in return, I'm being rewarded with cash back in my pocket, or of discounts and offers and freebies from some of my favorite kind of consumer brands, right? That's a really good example, I think, of how you can step outside the narrow confines of an insurance plan and deliver value straight back to a customer.
Right. No, in fact, I can relate this back to my own son. He's not very young, but relatively young, just started his first job. And the priority is not to save. The priority is to enjoy life, which should be. And the priority is not to kind of plan for future. And that's why I think inculcating these kind of thoughts are very important. And that's what I do with my son, where I tell him the benefits of compounding, that how one can grow wealth over a period of time. And it's all about discipline. It's all about systematic investments from time to time. And in fact, that's how I think the younger generation should learn from.
I agree. But that discipline needs to be rewarded and recognized, as you say. And I mean, same. I mean, if I look at one of my sisters, I remember many years ago, and I went back to the UK. She'd bought her first life insurance plan, protection plan. And she'd got an Apple Watch. So I won't say who she bought it from because it wasn't from us, but But I said sort of, why did you do that? Why did you buy the insurance plan? She said, because I got an Apple Watch.
Right.
Now, actually, she had to earn that Apple Watch. So, effectively, it was a financed Apple Watch.
Yes.
But over 5 years of premium payments, a proportion of her monthly premium would go into the cost of the watch. That I thought was quite clever because, again, protection is intangible.
Yeah.
A watch is very, very tangible.
True.
And I think for Gen Z, you need to be able to link your product or your solution or your recognition to something that has very clear, tangible monetary value.
So, Ed, if you had the opportunity of going back 25 years in your life, what would be your single advice which you would like to give to us?
That's a tough one. Maybe two things. Obviously, as we've discussed, start saving earlier. And that, I mean, saving in the broadest possible sense. If I had actually started making more sound financial advice decisions and allocations 10 years before I did, I'd be a lot wealthier than I am today. And so that's obviously one thing. It's never too early to start saving. It's never too early to start investing. That'd be point one. And point two, I'd say, is take career risk. Take career risk. It's very difficult to take career risk when you're in your 40s, 50s, 60s, when you've got families, you've got more dependencies. When you're entrenched along a particular career path and the opportunity costs and the switching costs are much higher. But when you're young, when you're in your early 20s, mid-20s, your opportunity costs are actually very low. You may think they're high at the time, but they're very low, trust me. And I go back my career, and I left the comfort zone of the UK for the first time when I was about 28, 29.
Okay.
I could have gone earlier, actually. I could have gone earlier, and whether it worked out or not, I don't know. But I look back and I go, I should have taken career risk sooner. Opportunities will present themselves. Yeah. And now I know, as an employer, as an executive, when I look at the talent in our workforce today, it's the ones that raise their hands and say, yes, but I've got a challenge over here, I've got an opportunity over here, it's outside of your comfort zone, it may be outside of your geographical borders. It's the ones that raise their hand and go, sure, I'll give it a go. They're the ones that I'm investing in. They're the ones that are talent for the future. They're the ones, whenever we have the next opportunity, that are getting promoted.
So at times, we all lean on a person who is like a pillar of support in our life. Who is your dependable person whom you have leaned out to?
Undoubtedly, it would be my wife, right? In many ways, of course, but I think also, even from a work and a business perspective, I think my wife's been a very strong grounding influence on me, in terms of, reminding me, we when we have moments of stress.
Yeah.
And like many people, you have, like many executives, you face times and moments where things don't go your way, either personally or professionally.
True.
And my wife's always been, on the one hand, very good at when things go wrong or when I don't achieve what I want to do, in terms of telling me and reminding me it's going to be okay and not to overly panic. And likewise, when you have moments of success,
Yes.
making sure your head doesn't become too big. Careers are roller coasters.
Yeah.
Capitalism and business is unpredictable. You will have highs, you will have lows. I've had businesses that have failed. I've had businesses that we put into runoff. I've been sold in the past. I've won awards. We've had records. All of this stuff, and I think my wife has been a very good grounding influence to say, don't celebrate too hard when things are great, and don't cry too much when things are not great.
Right. No, I can relate this to my personal life also, and my wife is also a pillar of support to me, because as you rightly said, at times when you are not in so good kind of environment, you're a bit kind of carrying some negative thoughts, that's where you get the positivity. That's where you get into conversations and you feel happy. So
agreed. Look, behind every great businessman, and I'm not saying I'm a great businessman, but behind every great businessman is a supporting spouse that is keeping them going straight and not being distracted by the goods and the bads.
Yeah. Ed, thanks a lot for sharing your valuable thoughts. Now I've got a few rapid fire questions for you.
Okay, go easy. All right.
So Ed as an insurance leader or Ed as a sports journalist?
Well, clearly as an insurance leader, because I was a rubbish journalist, which is why I had to leave and why I ended up in finance.
Okay. One word that defines your leadership style?
Fast.
Okay.
Time. The only finite commodity we have is time. So go fast.
Okay. One skill that every leader should master?
Empathy. We're a people business. If you don't understand people, it's not going to work. No.
If insurance had a tagline for Gen Z, what would it be?
Take control of your own destiny. I think that's kind of what our industry does. It reduces the reliance you have on others. And I think for young people, that's the key, right?
Ed, the biggest wealth destroyer, is it inflation or bad investment decisions?
Can I say neither? The biggest wealth destroyer is probably inertia, and not making your money work hard enough.
Okay. What was the best advice you ever took?
The best advice I ever took? Best advice I ever took was take risk, take personal risk, take career risk.
Right. And if you had to sum up your life philosophy in a hashtag, what would it be?
Hashtag don't look back. Keep going forward.
Okay. Ed, Diwali is a big festival for Indians here, but I'm seeing that now it's getting celebrated everywhere. So how do you celebrate Diwali?
Well, with lots of food. Okay. And with lots of office events. And I mean, again, in most of our markets, we have a pretty strong Indian diaspora working for our businesses. So Diwali is celebrated, whether I'm in Singapore, Hong Kong, the UK, and it typically will involve us celebrating over food, over candles in the office, and a chance to really bring people together. And actually now what I see is more and more of the office wearing traditional Indian attire.
Yeah.
And that's great because it celebrates diversity and it allows people to come together and share different cultures. So I'm a big supporter of Diwali. And I hope to be here later in this year to celebrate it with you. Right?
Looking forward to that, yeah. Ed, you work in so many countries, so many markets, and you deal with executives all over the globe. Any piece of advice you have for our executives here?
One thing I'd say, and it links to your tagline, your company slogan of promises ka partner. We make promises. Our industry makes promises. And I've seen firsthand in certain markets in the West what happens when those promises don't get fulfilled. That is when industries decline. That is when regulation intervenes, and it's where consumers lose trust in insurers to meet those promises. So the most important thing I would say to any executive in this market is keep delivering your promises, hit your investment returns, pay your claims, never ever compromise on the trust that your companies are creating.
Absolutely right, Ed. I think what we sell to our customers is a promise, and that's our tagline, Promises Ka Partner. And this is what we offer to our customers that have trust on our business and have a disciplined investing into our products. So Ed, it was a great session. Now we go out and we sign on our pot, which will be placed on our wall of dependability. So let's go.
Looking forward to it.
Thank you.
Thank you.
Thanks.
Canara HSBC Life Insurance. Promises ka partner.